What's up, everyone? It's Infamy, and I'm here today with another strategy video. I talked yesterday with a member of the server about making a specific video to explain a strategy that I'm currently using. I have used it for a while. I've gotten very familiar with it. It's a very, very simple strategy, one that might be better suited to people that have a little bit less time to dedicate to the chart, a little bit less time to just really get into trading, that want to have trading less as a full-time thing, maybe as a side hustle, some kind of secondary income. It's a very passive strategy in the sense that the system itself tells you exactly when to take a trade. There is never any guesswork involved. And in that, I do believe it's a very good strategy for just about everyone across the board. It doesn't matter if you're a beginner that heard about trading 2 weeks ago or if you've been in the markets for 2 decades. It's a system that relies on two very simple indicators. One of them is the MACD, which is an indicator that was developed in 1977 and has had an incredibly well-proven track record since then. And the other one is a fairly simple moving average indicator. Because this system only uses two indicators, it's easily available for everybody because TradingView's free version has a limit of two indicators. It used to be three, which invalidates a lot of previous strategies that are on YouTube that use three indicators that you just can't make use of with today's climate of TradingView. But this one only uses two. Like I said, the free version of TradingView allows you to have two indicators simultaneously on your chart, which are the 3 SMMA indicator, which, if I go to my favorites here, is the 3 Smooth Moving Average by Hamid Safi. And the other one is just a simple MACD. You can either type in just MACD or you can type in the whole name, Moving Average Convergence Divergence. It doesn't matter. That's all you need. Now, the MACD settings are going to stay how they are. I have mine slightly changed to have different colors because I want to match my black and white color scheme a little bit, because that's just something personally that I like to do with things that I spend time with, that they look nice, that I like looking at them. It makes it a bit easier to stick to things. I also got rid of the zero line. I can't remember if that's on by default. You can just copy these settings. None of this is changed. This is the default settings. And obviously the style is entirely up to you. That doesn't really have any impact on how well you trade with it. The second indicator, the 3 SMMA, all you're going to do is change the length of the third one. You can change the length of any one of them to 200, but the third one by default is 200. And then you're just going to unrender the first two. You just click on these so they're unchecked, and that will stop them from rendering. As you can see, if I put these up, it'll render them. If I click it again, it will de-render them because you only need the 200 period moving average. All of that being said, this system is very, very simple. It's a slightly different version of the MACD system, which usually uses an EMA instead of an SMMA. And it also uses slightly different settings for your take profit and stop loss. Usually what the MACD systems are designed for is to have a 1.5 risk to reward ratio, which we maintain in this system, but they're supposed to have the stop loss below a swing low like this, and then a 1.5 based on that. What I do instead is I have a set pip amount for my stop loss and take profit. Now, if you paid attention to the top of the screen here, you can see we are on the British pound US dollar on the 15-minute time frame. Usually I see MACD traded on something like Euro JPY or Euro USD, and on the 30-minute, sometimes even the hour time frame. What we achieve here by going to the 15-minute is a slightly higher trading frequency, and what we get by having set take profit and stop levels is a slightly higher win rate, which both of those things obviously great. Currently with this system, I'm sitting at about a 72% win rate that I've maintained over multiple months, and a 72% win rate is perfectly fine for a 1.5 risk to reward ratio. I do expect it towards some of the rougher months, towards the holidays, to drop a little bit. I'm expecting a drop to about 65 to 68%. It's still a fantastic win rate and can help you achieve basically anything you want in trading. It's not going to stop you in any way. It's a very long-term system, obviously, with how much proof there is to it. again, decades of usage on this system. But let's actually get into the strategy. It's very simple. Once you have your indicator, your MACD, and your SMMA, all you need to do is pay attention to 3 different things to tell you when to get into a trade. Now, the most important thing is whether or not the price is above or below the moving average. This is your first signal that tells you which type of trade you're going to look for. If you notice here, we're above the moving average and I bought. Over here, we're still above and I bought. Down here, we're below and I sold. Should tell you already, if you're paying attention, that as long as the price is above, we only take signals that tell us to buy. The price is below, we only take signals that tell us to sell. So the first indication of which trade you're going to take is the location of the price, whether it's above or below. Then you can look for the second thing. In this case, since the price is above the moving average, we're looking for buys. What a buy signal on the MACD looks like is the moving averages going below the 0 line, which the 0 line is this in the middle right here. It's like right down here where the red turns to green, basically, like just in the middle of this graph down here. That's where the 0 line is. Now, if you have the MACD enabled, you can, I'll just do it quickly for illustration purposes. Put the 0 line there, I'll make it yellow and I'll make it thick so you can see it down there, or make it blue. This in the middle here is the 0 line. I'll disable that again because it doesn't need to be there once you know where the 0 line is. But once these 2 moving averages, one of them is the MACD line and the other one is just a 26, I think, period moving average. Once they're both below the 0 line, what you're now waiting for is the MACD line, which is the shorter term, the more jagged line, in this case, the black line with my example. You're waiting for it to cross above the white line, to cross above the slower, smoother line, which, as you can see, happens right here. If I go ahead and just zoom that in a little bit, you can see right here, it goes from below to above. Goes from below to above. Once you can see a space, a bit of air, right, the background color between the moving averages, that means there's enough space for that move to be confirmed. What you then do is wait for the candle to close, which, as you can see on this candle right here, the candle at 8:30 a.m. is when it crossed. So I then waited for the open of the next candle, which was right here. I was a little bit late to this because I had things to do. Mornings are usually a little bit random in my household, so I don't always get trades this early. But I got in on the next candle as it opened is when I should have gotten in. I got in a little bit late, but you see this trade here. I entered the trade. This one lost. We got a signal again. It crossed back above the moving average. We got space. I got in. I got a much better entry this time. You can see the next trade won. The short example would be the exact opposite, where over here we have another trade that should not have been taken. This one was kind of not, this was not a trade that I should have taken. I should not have entered this trade because there isn't any signal. You can see this is very messy. It's hovering around the 0 line. It's high risk, low reward, not really worth it. If we go to this one here, this is actually a fairly nice setup. This one at 12:30, a little bit before 1 p.m. So you can see here, the moving averages are now above the 0 line because for a short, they need to be above the 0 line. And now the shorter period one is crossing below. And once it crosses below, I have my entry for the short signal. Again, a 1.5 risk reward ratio. I use 20 pips every trade. Every single trade has a 20 pip to 30 pip ratio. That means you are never changing this under any circumstance. There is a version of this strategy where you can use market structure to identify targets instead of having a firm 30 pip target every time. And what you do there is, for example, here you have a very heavy reaction. This is your previous lowest low. So that would be your target for this if that's what you want to do. And you can get a 1 to 2 in this case out of it instead of a 1.5. But your base level strategy for this is only going to be 20 pips for the stop loss, 30 pips for the take profit. Your entries for short trades are going to have the following criteria. price is below the 200 moving average, like right here, we're clearly below the moving average. The two moving averages, both of them, are above the zero line on the MACD, and the shorter time one, the one that's more jagged and weird, crosses below the longer term one. That is your entry for a short trade. For a long trade, it's the exact opposite. You can see there's a lot of winning trades here doing this big trade, or big trend, big downtrend. Don't mind that one, that doesn't matter. That's not according to this system. We have a trade here. Where is the MACD? There it is. For a long trade, we want the price to be above the moving average, which it is here. Both of the moving averages down here to be below the zero line, and the crossover to the top. That's your buy entry. And again, 20 pips stop loss, 30 pip take profit. Very simple system. There's multiple videos about this strategy. There's tons and tons of videos about the EMA strategy if you want to watch those. But keep in mind, if you use this specific system, the entry criteria are the same. However, your take profit will always be 30 pips. Your stop loss will always be 20 pips. And your pair will always be GBP USD on the 15-minute. You are not trading Euro USD. You are not trading Euro JPY. You are not trading GBP JPY. You're not trading the hourly, the 4 hourly, the half hourly. You're not trading the 5 or 1 minute. This system with the 20 pips to 30 pips is specifically designed for GBP USD on the 15-minute time frame. The entry method is the same. If I explained it poorly and you need more examples of it, you can watch those on YouTube. They're everywhere. Again, this strategy is very popular. It's proven. If you need the entry examples, you can find them there. But do keep in mind, the stop loss is different from what they're going to tell you. You have 30 pips of target, 20 pips of stop loss. That's it. It is the same every single time. The videos will tell you to target previous highs and lows. That is not this strategy. You will always have a 20 pip stop loss and 30 pip take profit. The entry is the same. So again, if you need more examples, you can watch those videos. But that's about it. Again, this strategy is very simple. It takes like 5 to 10 minutes to just look at an example to understand it fully. And after that, you have a strategy that can literally make you a millionaire. It's such a simple system that if you just stick to it, it can make you a millionaire. Now, it's going to take a while. There are more advanced systems out there that could maybe do it faster. This is a system with over 40 years of proven data, over 40 years of successful trades. There are very few systems that can offer you this level of certainty that you will make money, especially because this system is rule-based. You have 3 things to consider. I'll go over them again. You have 3 things to consider. I'll make a little checklist here where we have 1, 2, and 3. Your first part that tells you, your first step in the checklist that tells you which trade you take, which, by the way, let me just make that like bigger so it's easier to see. Put it over here in the empty space. What you need on the first one is location of price. Location of price is the first and most important thing. That tells you where you're going, okay? If it's below, you're only looking for sells. If it's above the moving average, you're only looking for buys. The second most important thing is the location of the MACD and MACD moving average. Again, that means where these 2 lines are. Are they below or are they above the zero line in the middle here? Third thing is the crossover. Those are your 3 things. Once you have the crossover, you have your entry. If any of these 3 are missing, you do not have an entry. It's that simple. Those are your 3 rules. You either have a trade or you don't. There's never any guesswork involved. There's never any time spent thinking about whether you're making the right choice. The system makes all decisions for you, which means there's very little emotion that can mess you up as a trader in this, because you're just following a checklist. You're just following rules. If you can do that, you can make money with this system. That is all it takes. Again, an example here, prices below the moving average, as you can see up here. These lines are above the 0 line, and they're crossing. The black line is crossing the white line from top to bottom. The direction of the black line, the direction of the shorter period moving average, is going to tell you the direction of your trade. So if this is above the white line and suddenly is going below the white line, so it's going down, that means your trade is going down. If we're up here, above, and this is below, you can see the black line is on the bottom. Now it's going up, which means your trade is going up. It's that simple. Again, if you need more examples, they're on YouTube. Just keep in mind 20 pips, 30 pips. Keep these 3 rules in mind. That is all you will need to make money in trading. It is that simple. I will continue to preach that it is that simple. And with that, I am out for today. Hope you have fun and profits in trading, and I'll see you another time.